Okay, good afternoon, folks. It's 6 p.m. now, London time. Markets, London session's just closed. Quick sound check. Everything coming through okay? Okay, just a quick recap of what we're seeing today. It's not going to be a long one. Markets seem to have been sideways moving for the last few hours. Dollar index, as we spoke about this morning. If I just put up the dollar index here now, it's at all important zone that I've been talking about all last couple of days. We are basically just entered into this zone. This is a level of resistance, guys. So I'm definitely keeping an eye on any dollar pairs with this in mind. This is the level back from the end of February. It's proven to be. It's tested it here once back in middle of March. We've tested it a couple of times. We're into this zone at the moment. Quite honestly, if anything, to push us into this zone and beyond, I think we're going to see some catalysts. I think there's still nervousness in the market going on with what we're seeing with Trump and his protectionist strategy with China. The Chinese president, of course, coming over later part of the week, so that's weighing on people's nerves at the moment. Bond markets are holding up. Bond markets yield still around 2.35, something like that. So the bond market is still holding up. So seeing a bit of a sideways movement in the dollar at the moment. It's definitely holding resistance here. So any strength in dollar-related pairs, I would be mindful of. Just having a comparison to the dollar yen. Put both of these on the 1 hour chart. Okay, now if you look at what's happening for the last couple of days or so, we've had the dollar strength, but the dollar has been weakening against the Japanese yen. This has turned around now in the last few hours. The risk off has been slightly reversed. We're seeing now some dollar strength against the yen. So the yen is basically weakening, having been a very strong currency for the last couple of days. It's been the strongest. The yen is now giving back some ground, which I'm sure will be reflected in my faithful old strength meter. So you can always look at the individuals, or you can of course just go to the strength meter, and you see here this is the 1 hour on the strength meter. The yen's been up here for pretty much a couple of days, and now it's heading back. This is the 1 hour. So the 1 hour, of course, is much more responsive than the benchmark 4 hour that I look at, but it gives you an indication of what's happening at the moment. So we're seeing some yen weakening. If you drill out to the 4 hour, it will still show you being the strongest currency, but the movement of the line is heading down south towards the center line. Remember, this center line is my moving average. Now, for those of you that are using this momentum meter, you can always change this moving average. I like to use the 20 moving average because it's something that I've always used. It's not too fast, not too slow, but you can change that. If you right click, you can go into settings, and there's a I think you go in here, you can move the MA period. Yours is going to look slightly different than mine because mine is the original, but you can move this MA period here to whatever setting you like. If you want it to be less responsive, you can make it, move it out to 40 or something like that. But I like to use 20. It's not too slow, not too fast. What we're also seeing is the euro strength. So the euro has been under pressure for a day and a half. It's now putting on some bid, and we're seeing some euro strength. Also seeing some CAD strength. Now CAD's following the oil markets higher. If you look at oil markets, loud and clear. Thanks, guys. You can see I'm rushing through it today. I've got a whole bunch of stuff to get through before 8 o'clock tonight. So oil markets are really caught a bid. This is the WTI. Now we are at 51, just broken through the 51 level. Okay, so we're back up to the beginning of the monthly highs, almost back up to where we were on the 8th, and of course the level of the market's going to be eyeing here is 52.5. So it's still ways away from that, but we are back at this level here, which we haven't seen for a while. So the 51 level. Now that's called a bid under the Canadian dollar. Oil prices had a sort of a record run last week, up 5%. Had a consolidation yesterday, but of course we're still looking at OPEC with their talks about continuing their production cuts and what have you. Now that won't be announced until OPEC's not until the end of May. They're going to start talking, I think, on 23rd of April, but the decision won't be at the end of May. So there's going to be volatility in the oil markets certainly up to that. Anyway, so the Canadian dollar is following oil markets higher. We had a big rally in oil last week, pullback yesterday, but now we're seeing some continued strength in the oil, followed by CAD. Now, CAD had some numbers out earlier. I don't know if you were watching that. We had some trade figures out in Canada, which weren't particularly good. The trade balance slipped into the red again. So hadn't it been for the those poor trade numbers, I think you'd find the Canadian dollar considerably higher than it is at the moment. Now, that basically makes me think that the Canadian dollar still has got some move to the upside once the trade figures sort of are taken out of people's radar and we get focusing back on the oil markets again. As oil pushes up, Canadian dollar will follow, but it's lagging behind at the moment because of the Canadian trade figures, I fear. Okay, my favourite pair at the moment. I'm still looking at Aussie dollar. Aussie dollar as a sell, mindful of dollar index at that key level to the upside, 165 dollar index. But I'm still liking to sell Aussie dollar. I don't see any real catalyst at the moment to make me want to get long the Aussie. There's nothing I don't think that's going to get me snapped out of that unless the dollar falls out of bed and Trump starts fighting wars with China that we weren't expecting. I don't see any reason why the Aussie is a screaming buy. So I've got my sell zone from earlier today. We didn't get up there yet. We've had a sell zone back up at the 75.80 level. We've broken through the 76 level convincingly. You still want to get short of this. If you want to take an aggressive entry could be at 75.70. This is the 15-minute chart. 15-minute chart ATR goes out to around 10. So a 3 ATR stop would take you above 76. If it trades above 76, yep, we're wrong. The 76 will be up about here, so we know we're definitely wrong. So you're definitely wrong if you use a 3 ATR stop on a 15-minute Aussie US short. So an aggressive entry could be selling around here, chaps, 75.70. So we're still yeah, okay, that's about 2. The ATR is quieting down now. It's 5, but the ATR has been averaging. It's been up at 9, 8, and 9. So an aggressive entry for intraday trade, 75.70, a reasonable sell. To retarget to the downside, test the lows, 74 below 74.50. All eyes will be on 75.50. All eyes will be on 75. And if we break 75, quite frankly, it's let's just move out to the daily. If you break 75, we are going to be looking at the Aussie dollar going into a bear market, and a bear market could easily take us down. It's a longer term, of course, down to the 72 area. So I know we're trading on the on a 15-minute chart. You might not have a 300 pip profit target, but if you're trading off a 1-hour chart and have a wider stop, selling around 75, 60 level with an 80 pip stop, you definitely know you're wrong then. 76.5 back down to these lows. It's a longer term trade. So the Aussie dollar is on my radar, something to keep an eye on. Naturally, we've got the all important non-farm payroll out on Friday in the States. I think it's going to be overshadowed or certainly matched with the president from China coming over as well. All eyes on that. All eyes are on your Twitter accounts, making sure. Just seeing some opinion polls coming in from France. Macron at 60.5 and Le Pen at 39.40, basically closing the gap. All eyes will be on the meeting between those two. All eyes will be on Twitter, see if anything doesn't come out. I mean, normally when he's on shore, you don't normally find anything too negative coming out. But the last thing the dollar needs now is a trade war with China, or any negative comments coming out of that. I think that's why the stock market is wobbly at the moment. Stock market's, we had a fallback, we've had recovery somewhat, but now in consolidation area. Okay, the stock market is really looking for direction. The stock market is nervous. The stock market could easily, you know, it's got more to the downside potentially than it has to the upside. You know, as we said this last couple of weeks, and we proved to be right. You know, there's 400 points to the downside easily. There's not necessarily an easy 400 points to the upside unless we see some catalyst. Now, Trump looks as though he's sitting on his hands in terms of his tax reforms and his you know, the agenda that's basically got us up in these levels in the first place. It seems to be stalling somewhat. Market's definitely nervous about the Chinese, and I think that's reflected in gold prices as well. Quite honestly, if you look at gold at the moment, in fact, we will look at gold. It's basically at here we are, basically at its 200 moving average, daily moving average. So gold at 12.56. So here we are at the moment. Dollar strong, gold is strong. You know, that's not normal phenomenon that we see in the markets. Normally one goes against the other, but at the moment we're seeing dollar strength and coupled with gold strength. You know, I'm not a big trader of gold. People are in gold at the moment. People are supporting gold at the moment because I think of safe haven play with risk off. You know, and I think that's where we are at the moment. Whether we can push through here at the moment without some major fallout in the dollar, you know, I don't know. I don't know if that's likely. I think that, you know, the 1260 level is our key level in gold. We've been speaking about that again for a while. Let me just put out to the 4 hour. So gold up here. I'll have a look at the chat in a minute if anyone's chatting to me. 1260 level was the 1263 level back from the end of February. Oh, my birthday. And pull out to the daily. Okay, so this is the level here, consolidation area from October last year. So this is a key level in gold. We're also at the 200 moving average, daily moving average. In gold I use the EMA. Some people like to use SMA. I use EMA. So we're at the 200 moving average. Whether gold can push through at these levels, guys, unless we see dollar fall off, possibly not. Counter trend trade in gold, possibly trade this for the downside now. Back down to the 1240 level. I think 1240 level is 1242 level. I think, you know, you could see $15 to the downside with less risk to the upside. So dollar selling at these levels. You know me. I don't stand in front of freight trains. But this is, at the moment, you know, just seems to be risk-reward, not in the favour of buying gold at this moment in time. Right, let's have a look at the chat. As I say, got a few thumbs up, Yo-Yo. Jason, always nice to have a thumbs up from your colleague. Thanks, Jason. Market is almost dead. Bangash. Yeah, it's there, but there are opportunities in there at the moment. I mean, look at pound yen. We're going to look at pound yen in a moment. Pound yen has always got something going on. Night average, I'm a demo trader. No, it's the best. It's for nothing wrong with starting off. Okay. I just want to look at cable before I look at pound yen. Now, excuse me, the UK Finance Minister, we call him the Chancellor of the Exchequer because we're different over here. UK Finance Minister is citing concerns and citing tension ahead in possible Brexit talks, as there's people out there that want us to fail. So Brexit is not plain sailing. Pound, as you know, my view, this time next year pound will be higher. Intraday, we're settling in. I think that the pound bias is to the downside. We've broken. We didn't like being above 125 for too long after Brexit. We've now broken through 125. I think we're likely to retest now the 124 handle. So it's all a matter of looking for the right entry for the risk reward. The trend is definitely to the downside still. Okay, trend is to the downside, and my entry level earlier today was at 124.67. We missed it. This is about 4 hours ago. I put this in this morning, guys, and I put an alert, and I didn't get my alert for some reason, and that's because we missed it. 124.64, and my alert was at 124.66. There you go, missed it by 2 pips, my entry. And and then we've rolled back over. So that was picked a good level, of course, but we didn't get there by 2 pips. Happens that way sometimes. I was at the vet, unfortunately, with my one of my animals, with a dog, and so I wasn't at the screens for about 2 hours of the day. That's why I missed this. Otherwise, we would have got a trade off there. But my bias still is to the downside in pound dollar, with a retest of the 124 handle and possibly popping through to retest the 123.75, something lying there, 123.75, yeah. And if you were to short pound dollar at this moment in time, you can have a 50 pip stop with a 70 or 80 pip take profit. It is not a bad risk reward trade on pound dollar. Now pound yen, I'm not getting freaked out by the yen correction. Not changing my bias on this. We are still pound yen a seller, and we are now into we're into an aggressive entry here. This is my aggressive entry. My conservative entry, which I'm going to hang back for, is up at 138.07. Okay, so it's still about 40 pips away at the moment. That is this is the 1 hour chart. That's about 34 pips is the ATR, so it's not far off a 1 ATR, so it's perfectly achievable. It's not a massive move in this pair, priced at 138 handle. So my sell zone would be around the 138. Now that's a 50% pullback from the highs up here, from the breakout of this support. This was holding it for a while. We broke lower, so I've taken a fib level from the not fib level, but a 50% pullback retracement level from. In fact, I need to move that. We have created a new low, so I need to move that lower. So my entry level has come down as well. So 138 handle. So there you go, 138 handle. So there's confluence there on a number of factors. The 138 level in pound yen. It's a factor of a 50% pullback from the breakout from this support. It's 138, so that's a psychological level. And if you look left on the chart, it's also naturally going to be a level of old support, which is now going to be potential resistance. These fanned out moving averages. I like these type of moving averages. It's a clear trending market for me at the moment. When they're all bunched up like they are up here, it's difficult to see a clear direction. When you see them fanned out like here, that's a trendy market. When they start closing around here, that's when it's time to. Of course, these are lagging indicators, but I mean, it's just a good visualization. You can't trade these. Well, people do trade them. I don't know if they're successful. I've never traded moving average crossovers, but they're just too lagging. But it's a good indication of a trending market. If you're looking at something like here, is it going to be trending? Well, all bunched together. Are you going to be trending? Are you going to be trading this? All bunched together. Okay, it's at 3 in the morning my time, or 2 in the morning midnight, so it's quite consolidation time of the day. You can see it's the Asian session. It's the time to leave that alone. But at the moment they're all fanned out, so I still like this as a trendy market to the downside. Shorting pound yen with an entry around 38 for 3 levels of confluence. CRISPR. When I use 3 moving average, I always double up. So I use 10, 20, and 40. If you want to start with a 5, 10, 20, so I just basically double up over 3 moving averages. That's basically something I've always done since I was at the screens. I don't trade off them, it's just a visualization for me. But as I say, I double up. So if you want to use something slower and you want to use a 20, use 20, 40, 80, depending what time frames you're looking at, of course. My 20 is my favourite moving one, so it's the middle one. And I've got one either side. So I've got the 10 and the 40 either side, 10, 20, 40. Good evening, Sadi, to everyone here. Good evening to you too. Good evening, Joey. JD, hi all. A while ago this site wasn't like this. Nice redecoration, guys. Where there's a will, there's a way, JD. Will's been working hard. He's burnt 3 keyboards this week or last couple of weeks, revamping the site to make it more user-friendly for you guys, more functionality. So all we ask in return, if you like it, drop some trade ideas in. Let's have a look at some trade ideas. Oops, let's take that off. Trade ideas. Laser FX. What are you up to? Your long pound dollar. Oops, well that disagrees with me, but that's fine. I don't. Looks as though you're using the same type of moving average fan there. You're long at 124.43. Bit of a risky trade, but upside down here, head and shoulders, good risk reward, worth a punt. Yep. Don't like to use the word punt, but yeah, it's worth. You got your risk reward worked out, not a problem. Remember what I've said. No trade idea is a bad idea. You know, that's what makes a market. If everyone had the same idea, then there wouldn't be a market. It would just be one direction. So no idea is going to be frowned upon. It's useful to see what other people are doing, and indeed you got 5 likes from that as well. And so that's good. So we keep those ideas coming. I personally am on the other side of that trade, but well, actually I don't have an open trade at the moment. I will be on the other side of it if we pull back up a bit. Full disclosure, I have no open trades at the moment. I haven't been at my screens too much of the day. Okay, let's see what else we got up here. So there's not been many trade ideas today. We looked at this earlier. Steve, lots of lines on here. Cable short. Okay, well I prefer the cable short. Retrace to yesterday's high. 50% retracement. Yep, I got that theory. You like that theory? You're short at 124.65. So you're about break even now. So let's keep the trade ideas coming, guys. Not much going on there. Laser FX, a very quick $30. Yep. Just been to the vet, that didn't even touch the surface. $30 in the vet, I'll tell you that. Gosh. Good, thanks Jamoni. Get the ideas in there. Jamoni, someone was asking me earlier. This is really boring for people that know what I'm talking about here, but someone was asking me earlier what an ATR is. ATR stands for average true range. Okay, so the range of a market, of course, is where the candle opened to where it closed. So here you've got 0658 to 0651. The range of this candle is 7 pips. Okay, you count back the term that we're looking at. I use a 14 ATR. Averaging out all the ranges gives you the ATR, which is this line here at the bottom. And you'll see during the times of quiet Asian sessions, low volatility, the ATR drops off considerably, and in terms of high activity, it increases in size. Now, of course, the further out the time frame you look at, of course, the ATR will increase as well. So if you look at the day, on a day basis, it trades, on average 65 pips in a day. That's the average range on a daily basis in the euro-US dollar. Gives me a good indication of entries, exits. I know if I'm 3 ATRs. If I'm looking at a 15-minute chart and I'm 3 ATRs wrong, at some point in this business you've got to know when to admit defeat. And you can't just keep it open-ended. If the market moves 3 times its average against you, it's time to admit defeat, as far as I'm concerned. So that's why I use the ATR. It also gives me some defined profit targets as well. Very interesting. If you analyse ATR, see an ATR move more than 3 ATRs, 4 ATRs, normally a 4 ATR you'll see a reversal. Just analyse that. 4 ATRs from an entry point. It's quite bizarre how that works. So big players do look at ATRs. Okay guys, I will leave you there. I think Jason's in the room for today, obviously for a bit of the day. He has more of an active day in the room on Tuesdays and Thursdays. I'd see he's been active earlier. I was chatting to Jason earlier, had a good chat. He's saying he's liking the strength meter as well and getting some good follow up from the strength meter. So it's not a trade signal indicator. It's more of a give you the broader picture. Let's just drill down to the 1 hour before I leave, and we're seeing now that the US dollar is becoming the strongest currency over the last hour or so, and the yen is weakening. So buying dollar yen, we are into an aggressive sell zone for me. So I'm gonna, yeah. Bearing in mind the dollar index hitting a level of significant resistance, and coming into my aggressive sell zone, I'm just going to take a small trade in that. Oh, I'm in the wrong account. No, I'm in the wrong account here. So I'm going to take a short in the dollar yen. I'll be placing that short. I'll be placing a trade idea in here. I'm going to go short at 110.71. And my stop will be, we'll check the trade ideas out in a moment. This is where I'll be shorting this at the moment. My stop is going to be around up here, around the 11.10 area, 11.10.15 area. But I'll be doing that trade now and placing a trade idea in the trade room. Okay, guys, I'll speak to you in the morning, 8 a.m. GMT. I'll be BST. I'll be online. So until then, trade safe. Not expecting anything overnight. I don't think in Australia. We've had pretty much all that out. We've got Trueli Taula speaking this evening. He's the FOMC member, and he's talking at 3 hours from now. And New Zealand GDT price index later on. So trade safe. I want to get that trade off. So I'll speak to you. Tomorrow. Good luck.